What up, guys? It's your boy Jay Manchin, of course, and we are back with another video. Now, I'm sure on mainstream media and alternative media, you guys have been seeing a ton about if we're going into a recession or not, if we're in a recession, if we're not in a recession, if we do have a recession, what type of recession it's going to be. And yeah, that's what we're going to talk about today. We're going to go through some indicators to see if we are in and or going into a recession. Let's look together. We're going to start with unemployment, and I know this technically is a lagging indicator, but sometimes it can signal an economic environment coming down the pipeline. It could signal a recession, it could signal prosperity, depending on the current trend of the unemployment rate at that point in time. And we've been in a range of about 4 to 4.3% for about a year now. Right now it's sitting at 4.2, and still there are no signs of extreme weakness in the labor market, like at all. I can't see it anywhere. Please, someone, if I'm missing something, please tell me. I would love to know because I don't see it. Now, the SOM rule, which states that if the 3-month moving average of the unemployment rate is 0.5 or half percentage point above the previous 12-month low, that indicates in real time that we are in a recession. And if you look at the current SOM rule right now, it's 0.27. And so if we were looking at the SOM rule to figure out if we were in a recession right now, of course, some people say it's broken, of course, because we didn't go into a recession the one time it did spike, but you have to take into effect that it needs to be it needs to stay at that level for a while in order for it to confirm that we are in a recession. It's not just a hit and drop. It's if it's sustained, and I don't know that time period, if it sustains at that 5 or 0.5 number, 0.5% number, then you can be sure that we're in a recession. But as I said, it's at 0.27, and so we're half of that. So we have a way to go if we were looking at that to tell us if we were in a recession or not. Now, quickly on the yield curve. Now, a lot of investors like to look at the yield curve as an indication that we're going into a recession because of its long-term historical track record. But if you look now, and when I say track record, I mean when there's an inverted yield curve, when we come out of that inversion, you can basically be sure that we're going into a recession. That's how the market has perceived it over the last, multiple decades. And right now, as you can see, it's not inverted. One could say that it's on its way to being inverted right now, especially if we expect yields to rise on the short end. You can see there's a little slope in the middle there, but for the most part, obviously look at it, it's not inverted. So that's not telling us much either in terms of if we're going into a recession or not. If anything, it's telling us that we're not going into a recession. Then we have housing starts. Now with housing starts, as housing starts slow down, obviously that would equal a slowdown in sales volume, which obviously could participate a downturn in home prices and could be exacerbated by the labor market pressures if we were to have any. And so, since we've had some moderation in housing starts, people are looking at that as I think it's more like confirmation bias, right? Everyone that wants to believe that we're going into a recession in the short term, they look at the moderation in housing starts as an indication that we are in fact going into a recession. There's not some huge decline in housing starts. It was about a 2% decline in housing starts from April of last year. So we're not looking at anything too crazy. Although we are starting to see price declines in some states around the US, basically half the states around the US, I still don't think that's an indication of a broader housing collapse. I really don't. I think it's migration trends, although it's slowed down a ton, in combination with mortgage rate lock-in and uncertainty. So I don't think one of those three pressures are weighing extremely heavy on the housing market. I think it's truly a combination of all three. Look, housing has been going crazy for the last 5 years. We knew there was going to be a slowdown in home prices. Maybe not a decline, but we knew that things would slow down quite a bit. But I still think prices nationally will continue to move up, albeit a lot slower. And I'm talking about 1.5% national price gains year over year. Zillow is expecting a 1.9% decline in national home prices. But I feel like every, 2-3 years, Zillow comes out with a report saying that we're going to experience a decline in home prices nationally, and it just doesn't happen. And they cited inventory and lower sales volumes as the two main reasons. Although we're seeing increases in inventory around the country, I still don't believe there is an environment where we're going to get, just a huge glut of inventory, enough to warrant a decline in prices based on the newly existing supply on the market. Now, GDP. Now, if we're looking at the Atlanta Fed's GDP estimates, right? We saw in Q1 that they estimated a 2.4% decline in GDP in the first quarter of 2025. We did get a decline, but it was at 1.4%. And so there was, a level of accuracy there. Like they knew it was going to be a decline, right? They were correct in that forecast. Well, for the second quarter, they're projecting a 2.4% increase in GDP. And so if we're looking at that and we believe in that based on their Q1 accuracy, then I would say we're not going into a technical recession if we're using that definition of 2 consecutive quarters of negative GDP. And so that brings me to the actual question. Are we going into a recession? Probabilities right now for a recession from larger institutions range from 30 to 60% probability. The New York Fed is saying there's a 30% probability of a recession. JP Morgan is forecasting a 50 to 60% probability of a recession. Deutsche Bank is forecasting a 43% probability. And Goldman Sachs is saying that there's a 45% chance of a recession. Now, even with those guys saying it, they've been wrong a million times before as well. Not saying that I'm right, but I'm just saying that they've been wrong a million times before. And we just went through some important data pieces together. There is nothing that indicates that we are going into a recession soon. It just doesn't. I think the most uncertainty right now comes from the mix of tariff impacts. Imports could suffer tremendously, which could cause consumers to pull back on purchases, which obviously will leak into our GDP numbers and have a negative effect on that number. And that could cause a spiral, but I don't think we'll get that far. And determinants of a recession vary quite a bit. It could be a sustained period of weaker negative growth in GDP numbers, and it could be accompanied by a rising unemployment rate, but it doesn't have to be the case. Unemployment could stay steady and we go into a recession, technically. And the stock market doesn't have to collapse for us to be in a recession, but the stock market could indicate a coming recession. So guys, I'm not saying that we're not going into a recession. All I'm saying is there is nothing pointing to that. And most of the time throughout history, there's always something you can point to that indicates that we're going into a recession. There's nothing right now. So I'm going to continue to just monitor things. I'm going to continue to do what I'm doing with real estate. And we're going to keep working until even when something shows that it's breaking, we're still going to keep working. We're never going to stop working. It's just things may have to be adjusted slightly in order to keep flourishing in any environment. Thank you for watching, guys. I'll see you in the next one.